Scene 1, the electric revolution continues. Hey there, EV enthusiasts and tech lovers. Welcome to our deep dive into Tesla's Q3 2024 performance and future outlook. Buckle up, because we're about to take a high-voltage journey through the world of electric vehicles, renewable energy, and cutting-edge technology. As we roll into the final quarter of 2024, the electric vehicle market is hotter than ever. Tesla, the undisputed leader in this space, has just released its Q3 results, and boy, do we have a lot to unpack. From record-breaking deliveries to groundbreaking innovations, Tesla continues to push the boundaries of what's possible in the automotive and energy sectors. But before we dive into the nitty-gritty, let's set the stage. The global EV market is experiencing explosive growth, with more players entering the field every day. Traditional automakers are scrambling to catch up, while tech giants are throwing their hats into the ring. Yet, amidst this increasingly crowded landscape, Tesla stands tall, continuing to innovate and lead the charge towards a sustainable future. So, are you ready to explore the world of Tesla in Q3 2024? Let's hit the accelerator and zoom into the details. Scene 2, Delivery Domination. Let's kick things off with the headline numbers that have everyone talking. Tesla's Q3 2024 deliveries. In a quarter that saw many traditional automakers struggling with supply chain issues and economic headwinds, Tesla managed to deliver a whopping 462,890 vehicles worldwide. That's a 6.4% increase year-on-year and a 4.26% bump from Q2. Not too shabby, right? But here's where it gets really interesting. Of those 462,890 vehicles, 181,883 were sold in China alone. That's a staggering 30.27% year-on-year increase in the world's largest EV market. To put this into perspective, let's look at how Tesla's closest competitor in China, BYD, performed. While exact quarterly figures for BYD aren't available, we know that BYD has been nipping at Tesla's heels. In fact, BYD's global market share is estimated to be around 19%, neck and neck with Tesla's 19% share too. However, Tesla's strong performance in China shows that it's not backing down from the competition in this crucial market. Now, let's zoom out and look at the global picture. Tesla's 462,890 deliveries in Q3 2024 put it comfortably ahead of many traditional automakers in the EV space. For instance, General Motors, which has been making a big push into EVs, delivered around 20,000 electric vehicles in the same quarter. That's less than 5% of Tesla's deliveries. But it's not just about the numbers. Tesla's ability to ramp up production and maintain strong deliveries in the face of global economic challenges is a testament to its robust supply chain and manufacturing capabilities. While other automakers have been forced to cut production due to chip shortages and other issues, Tesla has managed to keep its production lines humming. Speaking of production, Tesla produced approximately 470,000 vehicles in Q3 2024. This slight overproduction compared to deliveries shows that Tesla is building up inventory to meet future demand, a smart move given the growing appetite for EVs worldwide. But Tesla isn't just about cars. The company also deployed 6.9 GWh of energy storage products in Q3 2024. This growing segment of Tesla's business is often overlooked, but plays a crucial role in the company's mission to accelerate the world's transition to sustainable energy. So, what does all this mean? Well, it shows that Tesla isn't just maintaining its lead in the EV race, it's extending it. Despite increased competition and economic challenges, Tesla continues to deliver, pun intended, quarter after quarter. But as we'll see later, the company isn't resting on its laurels. There's much more in store for the future of Tesla. Scene 3, Show me the money. Now that we've covered the deliveries, let's talk dollars and cents. After all, a company can deliver all the cars in the world. But if it's not making money, it won't be in business for long. Fortunately for Tesla, the financial picture in Q3 2024 is looking pretty rosy. Tesla reported revenue of $25.18 billion in Q3 2024. That's a 7.85% increase from the same quarter last year. Not too shabby, especially considering the economic headwinds many companies are facing. However, it's worth noting that this figure was slightly below analysts' expectations of $25.43 billion. But before you start worrying, let's dig a little deeper. The automotive segment, which is Tesla's bread and butter, brought in $20.02 billion in revenue. That's a 2% increase year-on-year. While this growth might seem modest, it's important to remember that Tesla has been reducing prices to make its vehicles more accessible and compete in new markets. So, the fact that revenue is still growing, despite these price cuts, is a positive sign. But here's where it gets really interesting. Tesla's energy generation and storage business raked in $2.38 billion in revenue, a whopping 52.4% increase year-on-year. This shows that Tesla's diversification strategy is paying off, with its energy business becoming an increasingly important part of its overall revenue mix. Now, let's talk profitability. Tesla reported non-GAAP diluted earnings per share (EPS) of 72 cents in Q3 2024. That's a 9.1% increase year-on-year and higher than analysts' expectations of 58 cents. In other words, Tesla isn't just growing. It's becoming more profitable as it grows. But wait, there's more. Tesla's gross profit for Q3 2024 was $5 billion, up 19.6% year-on-year. The company's gross margin came in at 19.8%, above analysts' expectations of 16.8%. This is particularly impressive given the price cuts Tesla has implemented. Let's put these numbers into perspective by comparing them to some of Tesla's competitors. General Motors, for instance, reported revenue of $44 billion in Q3 2024, with an EPS of $2.28, while GM's revenue is higher. Remember that this includes all of GM's vehicle sales, not just EVs. When it comes to EV-specific financials, Tesla is far ahead. Meanwhile, newer EV players like Rivian are still struggling to turn a profit. Rivian reported a net loss of $1.37 billion in Q3 2024, despite delivering over 15,000 vehicles. This highlights just how difficult it is to achieve profitability in the EV space and underscores Tesla's achievement in maintaining profitability quarter after quarter. But perhaps the most impressive financial metric from Tesla's Q3 2024 report is its operating cash flow. Tesla generated a record $6.3 billion in operating cash flow during the quarter. This strong cash generation gives Tesla the financial flexibility to invest in new technologies, expand its production capacity, and weather any economic storms that might come its way. So, what's the takeaway from all these numbers? Simply put, Tesla isn't just growing, it's growing profitably. Despite increased competition and economic challenges, Tesla continues to improve its financial performance. But as we'll see in the next sections, the company isn't content to rest on its laurels. There's much more in store for the future of Tesla. Scene 4, the margin game. Now, let's talk about something that gets investors and analysts really excited: margins. In the automotive industry, margins can make or break a company. And in Q3 2024, Tesla showed that it's still playing the margin game better than most. Tesla's automotive gross margin in Q3 2024 came in at 17.1%. Now, at first glance, this might not seem impressive. After all, it's lower than the eye-popping margins Tesla was posting a few years ago. But here's why this number is actually quite remarkable. First, remember that Tesla has been aggressively cutting prices to make its vehicles more accessible and to compete in new markets. Despite these price cuts, Tesla has managed to maintain a healthy margin. How? Through relentless cost-cutting and efficiency improvements. In fact, Tesla achieved its lowest cost per vehicle in Q3 2024. This means that even as Tesla reduces prices, it's also reducing its costs, allowing it to maintain profitability. It's like a high-stakes game of limbo. How low can you go while still staying on your feet? To put this in perspective, let's look at some of Tesla's competitors. General Motors, for instance, reported a gross margin of 14.1% in Q3 2024. Ford's automotive gross margin was even lower at 9.7%. And newer EV players like Rivian? They're still posting negative gross margins as they struggle to scale up production. But it's not just about automotive margins. Tesla's energy business is also showing impressive margin improvements. In Q3 2024, Tesla's energy margins reached a record high of over 30%. This is a testament to Tesla's ability to innovate and improve efficiency not just in its automotive business, but across all its product lines. Now, you might be wondering, how does Tesla maintain these margins when it's constantly investing in new technologies and expanding production? Well, that's where Tesla's operational efficiency comes into play. Tesla has been working hard to reduce its operating expenses. In Q3 2024, Tesla's operating expenses declined both quarter-over-quarter and year-over-year. This was partially due to restructuring efforts undertaken in Q2, which are now bearing fruit. By keeping a tight lid on expenses while growing revenue, Tesla is able to maintain healthy margins even as it invests in the future. But perhaps the most exciting aspect of Tesla's margin story is its full self-driving (FSD) software. According to Business Insider, Tesla's FSD software is expected to achieve gross margins of over 50%. This high-margin software revenue could be a game-changer for Tesla, potentially boosting its overall margins in the coming years. So, what's the takeaway from Tesla's margin story? It's all about balance. Tesla is managing to walk a tightrope between making its vehicles more affordable, investing in the future, and maintaining profitability. It's a delicate balancing act. But so far, Tesla seems to be pulling it off with style. Scene 5, the China Conundrum. Now, let's zoom in on a market that's crucial for Tesla's future, China. The world's most populous country is also the world's largest EV market, and Tesla's performance here can make or break its global strategy. In Q3 2024, Tesla sold 181,883 vehicles in China. That's a 30.27% increase year-on-year and represents 39.29% of Tesla's global deliveries. These numbers are impressive, showing that Tesla is gaining traction in this highly competitive market. But here's where it gets interesting. While Tesla is growing in China, it's facing stiff competition from local players, particularly BYD. In fact, BYD has been giving Tesla a run for its money, not just in China but globally. As of Q3 2024, Tesla holds a 19% market share of global battery, while BYD is estimated to have a similar share around 19%. In the Chinese market specifically, BYD dominates with a 65% share of hybrids and 59% of BEVs. So, how is Tesla competing in this tough market? One strategy has been to localize production. Tesla's Gigafactory in Shanghai has been crucial in reducing costs and making Tesla vehicles more affordable for Chinese consumers. This local production also helps Tesla avoid potential tariffs and reduce shipping costs. Another strategy has been to tailor its vehicles to Chinese consumer preferences. For instance, Tesla has introduced features like karaoke systems, a popular feature in China, in its vehicles sold there. But it's not all smooth sailing for Tesla in China. The company faces challenges from regulatory changes, local competition, and changing consumer preferences. For instance, in May 2024, a new tariff on Chinese-made cars was announced, which could impact Tesla's sales in the US market. Despite these challenges, Tesla's strong performance in China in Q3 2024 shows that it's holding its own in this crucial market. But the competition isn't standing still. BYD, for instance, is rapidly expanding its international presence, with its international sales surging by 156% year-over-year in June 2024. The China story for Tesla is far from over. As the Chinese EV market continues to grow and evolve, Tesla will need to stay nimble and innovative to maintain its strong position. But based on its Q3 2024 performance, it seems that Tesla is up for the challenge. Scene 6, the energy revolution. While Tesla's car business often steals the spotlight, its energy business is quietly becoming a powerhouse in its own right. In Q3 2024, Tesla's energy generation and storage business brought in $2.38 billion in revenue, a staggering 52.4% increase year-on-year. But it's not just about the revenue. Tesla's energy business is also becoming increasingly profitable. In Q3 2024, Tesla's energy margins reached a record high of over 30%. This is a significant achievement, especially considering the capital-intensive nature of the energy business. So, what's driving this growth? A big part of it is Tesla's energy storage products. In Q3 2024, Tesla deployed 6.9 GWh of energy storage products. To put this into perspective, that's enough energy to power over 230,000 average US homes for a day. Tesla's energy storage products, including the Powerwall for homes and the Megapack for utility-scale applications, are gaining traction worldwide. For instance, Tesla's Lathrop Megapack facility achieved a 40 gigawatt-hour annual production rate in Q3 2024. That's a lot of batteries. But Tesla isn't just selling batteries. It's selling a vision of a sustainable energy future. Tesla's energy products work seamlessly with its solar offerings, allowing homeowners and businesses to generate, store, and use their own clean energy. This integrated approach sets Tesla apart from many of its competitors in the energy space. While companies like Sunrun or Enphase focus primarily on solar, and others like LG or Samsung concentrate on batteries, Tesla offers a complete energy ecosystem. Looking ahead, the future looks bright for Tesla's energy business. According to Allied Market Research, the global energy storage market could reach $435 billion by 2030. With its strong brand, technological edge, and integrated approach, Tesla is well positioned to capture a significant share of this growing market. But it's not just about the market opportunity. Tesla's energy business plays a crucial role in the company's overall mission to accelerate the world's transition to sustainable energy. By providing solutions for clean energy generation and storage, Tesla is helping to reduce reliance on fossil fuels and combat climate change. As we move towards a future of renewable energy and electric vehicles, Tesla's energy business could become just as important as its automotive business. In fact, some analysts believe that Tesla's energy business could eventually surpass its automotive business in terms of revenue and profitability. So, while Tesla's cars might be what first comes to mind when you think of the company, don't overlook its energy business. It's a key part of Tesla's strategy, and could be a major driver of growth in the years to come. Scene 7, the AI revolution. These safety improvements are not just impressive statistics. They represent real-world benefits for Tesla drivers and other road users. As Tesla's AI systems continue to learn and improve, we can expect to see even better safety performance in the future. But Tesla's AI ambitions go beyond just autonomous driving. In Q3 2024, Tesla unveiled its latest AI chip, the D2, which is designed specifically for training large language models and other AI applications. This move puts Tesla in direct competition with chip giants like NVIDIA and AMD in the AI hardware space. The D2 chip is not just a side project for Tesla. It's a key part of the company's strategy to become a leader in AI. Tesla's AI efforts are also extending into robotics. The company's humanoid robot, Optimus, made significant progress in Q3 2024. During a demonstration, Optimus showed improved dexterity and ability to perform complex tasks. While still in the early stages, this project could open up entirely new markets for Tesla in the future. To put Tesla's AI efforts into perspective, let's compare them with some competitors. While traditional automakers like General Motors and Ford are working on their own autonomous driving systems, they're generally seen as lagging behind Tesla. For instance, GM's Super Cruise system, while impressive, is still limited to certain pre-mapped highways, unlike Tesla's FSD, which aims to work on all roads. In the tech world, companies like Waymo, owned by Alphabet, and Cruise, majority owned by GM, are often seen as Tesla's closest competitors in autonomous driving. However, these companies are primarily focused on robot access, while Tesla is aiming to bring autonomous capabilities to personal vehicles at scale. Tesla's approach to AI and autonomous driving is unique in several ways. Data advantage: Tesla has a vast fleet of vehicles on the road, constantly collecting real-world driving data. This gives Tesla a significant advantage in training its AI systems. Vertical integration: Tesla designs its own AI chips, software, and vehicles, allowing for tighter integration and optimization. Over-the-air updates: Tesla can continuously improve its AI systems through software updates, even after vehicles have been sold. Vision-based approach: unlike many competitors who rely heavily on expensive LiDAR sensors, Tesla's autonomous driving system primarily uses cameras and neural networks, potentially allowing for lower-cost implementation at scale. Looking ahead, Tesla's AI efforts could have far-reaching implications. If successful, they could not only revolutionize transportation, but also open up new revenue streams for Tesla. For instance, the company has hinted at the possibility of a robotaxi network using Tesla vehicles. which could generate significant recurring revenue. Moreover, Tesla's AI capabilities could extend beyond automotive applications. With projects like Optimus and the D2 chip, Tesla is positioning itself as a major player in the broader AI industry. This could lead to new business opportunities in fields as diverse as manufacturing, healthcare, and home automation. However, it's important to note that Tesla's AI ambitions also come with challenges and risks. Regulatory hurdles, potential safety concerns, and intense competition are all factors that Tesla will need to navigate carefully. Despite these challenges, Tesla's progress in AI and autonomous driving in Q3 2024 shows that the company is committed to pushing the boundaries of what's possible. As Elon Musk said during the earnings call, "We're not just building cars, we're building the future of transportation and AI." Scene 8, the global expansion. While Tesla has long been associated with its home base in the United States, the company's Q3 2024 results show that it's increasingly becoming a global powerhouse. Let's take a whirlwind tour of Tesla's international operations and see how they're contributing to the company's growth. Starting in Europe, Tesla's Berlin Gigafactory has been ramping up production. In Q3 2024, the factory reached a production rate of 5,000 vehicles per week, a significant milestone that's helping Tesla meet the growing demand for EVs in Europe. This local production is crucial for reducing costs and delivery times. In the European market, Tesla's Model Y has been particularly popular in Europe, becoming the best-selling car, not just EV, in several countries. In fact, in Q3 2024, the Model Y was the best-selling vehicle in Germany, outpacing even traditional favorites from local manufacturers like Volkswagen and BMW. Moving to Asia, we've already discussed Tesla's strong performance in China. But it's worth noting that Tesla is also making inroads in other Asian markets. In India, for example, Tesla has been in talks with the government about potentially setting up a factory there, while no concrete plans have been announced. Yet, this shows Tesla's interest in tapping into one of the world's largest potential EV markets. In Japan, Tesla's energy business has been gaining traction. The company's Powerwall home battery system has been popular, especially in the wake of natural disasters that have highlighted the importance of energy resilience. Heading down under, Tesla's presence in Australia continues to grow. The company's big battery installation in South Australia, which was the world's largest lithium-ion battery when it was built, continues to prove its worth by stabilizing the grid and reducing costs. In Q3 2024, Tesla announced plans for several new large-scale battery projects in Australia, further cementing its position in the country's energy market. In South America, Tesla made headlines in Q3 2024 by announcing plans to build a gigafactory in Brazil. This move is seen as a strategic step to tap into the growing South American EV market, and could potentially serve as a production hub for the entire continent. Even in Africa, where EV adoption has been slower, Tesla is making moves. The company has been in talks with several African countries about potential partnerships and infrastructure projects. While still in early stages, these discussions show Tesla's truly global ambitions. Let's put some numbers to this global expansion. In Q3 2024, Europe accounted for 22% of Tesla's vehicle deliveries. Asia-Pacific, excluding China, accounted for 15%. Other markets, including South America and Africa, accounted for 5%. This global diversification is crucial for Tesla's long-term growth. It reduces the company's reliance on any single market, and allows it to tap into growth opportunities around the world. However, this global expansion also comes with challenges. Tesla needs to navigate different regulatory environments, consumer preferences, and competitive landscapes in each market. For instance, in Europe, Tesla faces stiff competition from local automakers, who are rapidly electrifying their lineups. In emerging markets, Tesla needs to adapt its products and pricing strategies to local conditions. Despite these challenges, Tesla's Q3 2024 results show that its global strategy is paying off. The company's ability to grow in diverse markets around the world is a key strength, setting it apart from many of its competitors who are more regionally focused. As Elon Musk said during the Q3 earnings call, Tesla is not just an American company anymore. We're a global company, and we're committed to accelerating the world's transition to sustainable energy in every corner of the globe. Scene 9, the road ahead. As we near the end of our journey through Tesla's Q3 2024 performance, it's time to look ahead. What does the future hold for Tesla? Based on the company's Q3 report and earnings call, there's plenty to be excited about. First and foremost, Tesla is doubling down on its commitment to affordability. The company announced plans to accelerate the development of its next-generation vehicle platform, which is expected to be even more cost-effective than current models. This could potentially lead to a $30,000 robotaxi, a price point that could dramatically expand the company's potential market. Elon Musk elaborated on this during the earnings call. Our goal has always been to make electric vehicles accessible to everyone. With our next-gen platform, we're taking a big step towards that goal. We believe this could be a game-changer for the entire automotive industry. But Tesla isn't just focusing on personal vehicles. The company also provided updates on its semi-truck program. In Q3 2024, Tesla delivered its 1,000th semi-truck, marking a significant milestone in its push into the commercial vehicle market. The company reported that feedback from early customers has been overwhelmingly positive, with many praising the semi's performance and cost savings. On the energy front, Tesla announced plans to significantly expand its energy storage production capacity. The company aims to reach an annual production rate of 100 GWh for energy storage products by the end of 2025. This ambitious target underscores Tesla's commitment to its energy business and its belief in the growing importance of energy storage in the transition to sustainable energy. In the realm of autonomous driving, Tesla reaffirmed its commitment to achieving full self-driving capabilities. The company announced plans to roll out major updates to its FSD software in the coming quarters, with the goal of achieving true autonomous driving in most conditions by the end of 2025. Tesla also provided updates on its robotics program. While still in early stages, the company sees significant potential in humanoid robots like Optimus. Elon Musk went as far as to say that in the long term, the robotics business could become even bigger than Tesla's automotive business. On the manufacturing front, Tesla announced plans for 2 new gigafactories. While the locations weren't disclosed, the company hinted at expanding its presence in emerging markets. These new factories will be crucial for Tesla to meet its ambitious production targets and continue its global expansion. In terms of financial outlook, Tesla reaffirmed its long-term target of 50% average annual growth in vehicle deliveries. The company also expects to continue improving its margins through ongoing cost reductions and operational efficiencies. Here are some key targets Tesla announced for the coming years. Annual vehicle production capacity of 3 million units by the end of 2025. Energy storage production capacity of 100 GWh annually by the end of 2025. Full self-driving capabilities in most conditions by the end of 2025. Launch of the next-generation vehicle platform by 2026. Expansion into new product categories, including robots, by 2027. Comparing these targets to competitors, we can see that Tesla's ambitions are truly in a league of their own. For instance, while Volkswagen, one of the world's largest automakers, aims to produce 1.5 million EVs annually by 2025, Tesla is targeting double that number. However, it's important to note that these targets are ambitious and come with significant challenges. Tesla will need to navigate supply chain issues, intense competition, regulatory hurdles, and technological challenges to achieve these goals. Despite these challenges, Tesla's Q3 2024 results and future outlook paint a picture of a company that's not just leading the EV revolution, but actively shaping the future of transportation and energy. As Elon Musk said during the earnings call, the road ahead is long and challenging, but also incredibly exciting. We're not just building a car company or an energy company. We're building the foundation for a sustainable future. Scene 10, The Tesla Effect. As we conclude our deep dive into Tesla's Q3 2024 performance and future outlook, it's worth stepping back and considering the broader impact Tesla is having on the world. This is what we call the Tesla effect. First and foremost, Tesla has been a driving force in the global transition to electric vehicles. In Q3 2024, EVs accounted for 18% of global new car sales, up from just 4% in 2020. Tesla's success has not only grown the EV market, but has also forced traditional automakers to accelerate their own EV plans. For instance, in response to Tesla's growing market share, companies like Volkswagen, Ford, and General Motors have all announced massive investments in EV development and production. Volkswagen aims to have 50% of its sales be electric by 2030, while GM has pledged to phase out internal combustion engines entirely by 2035. But Tesla's impact goes beyond just the automotive industry. The company's energy business is reshaping how we think about power generation and storage. Tesla's success with large-scale battery projects, like the one in South Australia, has demonstrated the viability of renewable energy, paired with battery storage as a reliable power source. This has had ripple effects throughout the energy industry. Utility companies around the world are increasingly investing in battery storage to complement renewable energy sources. For example, NextEra Energy, one of the largest utility companies in the US, announced plans to deploy 50 GWh of battery storage by 2025, citing Tesla's projects as inspiration. Tesla's innovations in manufacturing are also having a wide-ranging impact. The company's Gigafactory concept, which brings together vehicle production, battery production, and even raw material processing under one roof, is being studied and emulated by companies across various industries. In the tech world, Tesla's advances in AI and autonomous driving are pushing the boundaries of what's possible. The company's work on neural networks and computer vision is not only advancing self-driving technology, but also contributing to broader developments in AI, even in fields seemingly unrelated to Tesla's core business. The company's influence can be felt. For instance, Tesla's direct-to-consumer sales model has inspired other automakers to rethink their dealership networks. The company's over-the-air software updates have set new expectations for how cars, and other products, can be improved over time. Tesla's approach to innovation and problem-solving has also had a cultural impact. The company's willingness to take on big challenges and think outside the box has inspired a new generation of entrepreneurs and innovators. As one venture capitalist put it during a recent tech conference, every startup these days wants to be the Tesla of X. Of course, Tesla's rise hasn't been without controversy. The company's aggressive timelines and bold claims have sometimes led to disappointment when targets are missed. Its approach to autonomous driving, in particular, has faced criticism from some safety advocates. Nevertheless, it's hard to deny the transformative impact Tesla has had in just a few short years. From accelerating the transition to sustainable energy, to pushing the boundaries of AI and manufacturing, Tesla's influence extends far beyond its own products and services. As we look to the future, it's clear that the Tesla effect will continue to shape industries and drive innovation, whether Tesla achieves all of its ambitious goals or not. The company has already changed the course of automotive and energy history. Elon Musk summed it up well in the Q3 earnings call. Our mission has always been to accelerate the world's transition to sustainable energy, but along the way, we've found that we're not just changing an industry. We're changing the world. And we're just getting started. And with that, we conclude our journey through Tesla's Q3 2024 performance and future outlook. From record-breaking deliveries to groundbreaking innovations in AI and energy, Tesla continues to push the boundaries of what's possible. As we look to the future, one thing is clear: the Tesla story is far from over. The next chapter promises to be just as exciting as the last. Thank you for joining us on this electric journey. And if you enjoyed this deep dive into Tesla's world, don't forget to like, subscribe, and hit that notification bell. We'll be back with more electrifying content soon. Until next time, keep your eyes on the horizon and your foot on the accelerator of progress.